Well, if you're watching this video, chances are I am going to save you and or your buyer client from impending disaster at some point in the future. Today we're talking about insurance. And if you're watching this video, you're probably a really good agent. You're worried about self-development and learning and all that. Maybe you don't get a lot of escalations, but as the managing broker of our company, I get a lot of escalations. And over the past year, we've seen escalations on the rise, specifically in the area of homeowners insurance. And some of these are really nasty. So the first thing I'm going to do is I'm going to frame up the problem, and then I'm going to give you 3 easy strategies to completely avoid this in the future for you. And believe me, you want to avoid this because some of these have just been so nasty. All right, so let's get into what the problem is. The problem is really simple. First of all, insurance companies have faced tremendous cost pressure. So I'm sure that it's no surprise to anybody that just about every company has faced challenges from inflation. And so the cost of insurance claims has gone up, but the amount of money that your insurance company can charge you on a premium is controlled by your real estate commission. So for example, I'm in the state of Georgia. The Georgia Real Estate Commission has not allowed the insurance companies here to raise their rates in the same trajectory as inflation. So as their costs have gone up sharply, they have not been able to raise their rates and cover that. And so that puts a lot of pressure on the insurance companies. The other thing is there's been a lot of waste, fraud, and abuse. And so one of the most obvious areas that we've seen is roofs. And there's these companies that'll go door knock, roofing companies, and they'll say, hey, I'm 100% positive I can get you a new roof paid for by your insurance company. Even though there's nothing wrong with it, it's not leaking, I'm going to get you a roof paid for. And they do. And there's just been a lot of that kind of stuff that's happening that has really pressured the insurance companies. And I don't blame them for some of the stuff that they've had to do because these are very real problems. And so what this means is houses have become harder to insure fairly. I've seen some crazy insurance quotes. And so what they're going to do is, in the state of Georgia, if your roof is more than 15 years old, it's hard to insure the house at all. Some carriers will not insure a house if the roof is over 15 years old. And that's a problem if you've got a 30, 40-year roof, it's warranted, roof is in perfect condition, but the insurance company says, we won't touch it because that roof is 17 years old. And I've seen that happen. You're also looking at the clue report. Do you know what the clue is? If not, maybe you get a clue. I know it's a terrible joke. Google insurance clue report if you've never heard this before. What the clue report does is it looks at the house that you're going to buy. It looks at the history of the claims on that house. And it also looks at your history in terms of the type of claims that you've put in on your own for automobiles, for houses. And then, of course, it's looking at that property too. And so the clue report is going to pull all these things together and spit out some results for the insurance company that's going to help them understand what the risk is in insuring this particular property with you. And sometimes just based on the clue report alone, they'll say, we're not going to insure this. Or we'll insure it, but you thought your premium was going to be $2,000 and it's actually going to be $6,000. And so what I've seen happen and where this really becomes problematic is I've had so many phone calls over the past year where a buyer is 3 days out from closing and they get a call from the insurance company and the insurance company says, we can't insure this property. I've even had some escalations where somebody had purchased the house. They moved in, and after they moved in, they got canceled by the insurance company and they couldn't find another insurance company to insure them. And now they're stuck with a house that needs to be insured. It's part of their mortgage. They have no homeowners insurance. And believe me, folks, those are not fun to deal with. That's an ugly escalation. And you don't want to be caught up in that, especially when the solve is so easy. Now, as real estate agents, homeowners insurance has been one of those things that's kind of an afterthought. You get under contract, we focus on getting that contract signed and getting all those key terms agreed to. Then we get this inspection report. We're negotiating all the terms of that inspection report. And then once that's done, we're working with the mortgage officer to make sure that we get everything done there. We're interfacing with the closing attorney. Week out from closing, we might say, hey, did you get all your insurance stuff over to the lender or whatever? we're not even thinking about it. That has to be totally different. Times are changing. So I got 3 things for you. And these will absolutely save your hiney in the future. I promise you, because this is only going to get harder, but it's simple to fix. So number 1, I want you to have a really good insurance broker in your back pocket. Now, an insurance broker is an insurance agent that has access to multiple carriers. I'm going to give a huge shout out to Vanessa Moore from Comparion Insurance Agency. She's my back pocket person. And Comparion, if you're not familiar with them, that is Liberty Mutual's brokerage arm. So that is Liberty Mutual. Obviously, they underwrite Liberty Mutual, but they also have access to multiple other carriers. So when I send a client over to Vanessa, she can not only look at Liberty Mutual, but many other carriers, and she can find somebody to insure it. And she's comparing rates against each other. And that's really important because sometimes if you're just dealing with a single carrier agent, now you got to give multiple referrals. You might give 3 or 4 people and none of them can do it. But if I've got somebody that can sit there and look at several companies in aggregate, it's a much better experience for my client. Things are smoother. We're not sitting there hunting and pecking, and it's just awesome. So find yourself a good broker. That is going to be key for you. You've got to have an ace in the hole that's going to help you. Somebody that's going to problem solve if you find the perfect house with a 17-year-old roof or whatever, because your state might be different than mine. But you need to have that problem solver in hand before you have a problem. And if this hasn't come up for you yet, trust me, it will. So don't wait for it to be a problem. Work now on finding that broker that you can have in your back pocket. Have them take you to lunch. They want your business. So get some free lunch out of this. Go identify a couple, call them up, say, hey, listen, I need somebody in my back pocket for real estate referrals. I guarantee you they're not going to turn you down. Get to know them and find somebody that's going to be a good fit for you. That's number 1. Number 2, and this is really important. Now, mind you, I'm in Georgia. There's 50 different states with different real estate law, and we've got all kinds of different contracts. Some states have multiple contracts. We happen to use the Georgia Association of Realtor contracts. Yours might be different. But in the state of Georgia, there's not license law, nor is there anything in our contract that provides protection against a buyer with insurance. So what that means is you're 2 or 3 weeks into a contract and you find out the house is not insurable because of the house. There's a problem with the house. The roof is too old, whatever. Your buyer's going to lose their earnest money because there's not a contingency or protection built in anywhere for insurance. Yikes. So here's what we do. Very simple. Let's get an insurance quote during the due diligence period. We tend to wait. And most real estate agents aren't even talking about this. They're not even talking about insurance. They'll ask, oh, who do you use for your insurance? Oh, make sure you get your insurance done and get it over to your lender. No. This needs to be something now that you're much more proactive about. Hey, here's my insurance broker. I want you to reach out to them during the due diligence period because we need to find out if there's any issues with getting this house insured economically for you in a way that makes sense. We need to know that now, not later. I would much rather know that there's an insurance issue during the due diligence period. So if we need to terminate or we need to extend due diligence to do more research on the insurability of this home, we're doing that up front where we are protecting our buyer's earnest money. That's the key here. So in order to do this, there's a couple of things. Number 1, start talking about this early. Don't even wait till you're under contract. When you start working with a buyer, tell them about your insurance contact and just say, hey, listen, this is an area that's starting to get a little dicey. So when we go under contract, not only are we going to be focused on doing that inspection, but we also want to get an insurance quote as quickly as possible. And it's counterintuitive to us because a lot of times we want to make sure that we're past the due diligence period before we reach out to an insurance company or before we start doing any heavy lifting on it because we don't even know if we're moving forward yet. We haven't even inspected. Got to change your thinking. We got to do something totally different now. So now we've got to get that person talking to an insurance company right up front because that could be the difference maker on whether or not this transaction goes forward. So we might as well know now. And then at the end, as we're going through this in the due diligence period, if we find that there's a problem or potential problem with the insurance, we can do one of two things. We can either ask to extend the due diligence so we can figure this out, or we can carve out an extension only for the insurance. So we can say, hey, listen, we don't need to worry about the inspection and all that. We've passed that, but we want to carve out on due diligence just for the insurance until X date while we're figuring it out. And so obviously, if you're going to work on creating some sort of complex amendment like that, you'll want to work with your broker or your attorney to get that worded correctly. But the spirit of it is, hey, we're going to carve one thing out of that due diligence and we're going to extend that. And so that will help give you some protection if you do find that there's a potential issue. And like I said, that issue can come from a number of different ways, but figuring that out now while we have some protection versus later when there's no contingency, there's no protection for it, it could absolutely change the game. Number 3, the last suggestion I have for you is maybe it makes sense for you to create an exhibit. And this is something you're going to want to work with your brokerage or whoever does your contracts, but maybe you want to create an insurance exhibit that you can attach to a contract that does work as a standalone contingency. I think that might be a little bit more problematic because it's one of those things where you're adding complexity to your offer, and it could be one of those things where if you're the only one doing it, so you've created your own exhibit in your brokerage, they're not used to that, and hey, whoa, what is this? And they're uncomfortable with it, but maybe it makes sense, and it's something that you might want to think about exploring. Maybe you'll be the trendsetter in your market, being the first one to do it, because what you may want to do is give yourself more time for the insurance. So we carve that off as a specific contingency, and if it's a newer home or it's in great condition, it's probably not an issue at all, and nobody's going to be concerned about it. So if you need 2-3 weeks for that specific contingency, it may not be a problem at all. So you may want to talk to your brokerage about doing that. So if you do these, if you have somebody in your back pocket and then you do 2 or 3, do it during the due diligence period or have some sort of exhibit, I promise you, you won't deal with this issue. I cannot count how many times I have gotten into a really dicey escalation with one of our agents' buyer clients because we found out about an insurability issue at the 11th hour. And I've had it come up to where that insurance quote where everybody was expecting it to be $2,000 came out to be $5,000, and it throws the DTI of the loan off, and we're not closing. I've had it come up to where right before closing, the insurance company comes back and says, hey, there's a claim on the roof that was never paid. So it was a denied claim, and that roof is 5 years old, but we will not insure the house until a new roof is put on or a repair is done because there's an open claim that was never paid. There's all these little things that can come up. Let's not find out about those at the 11th hour when there's no contingency protecting our client, because that could just be awful. So I hope this is helpful to you. I don't see a lot of people talking about it, but I'm feeling this as a broker, and I know that this issue is only going to get worse. So you might as well get in the habit now of insurance being one of those things you're talking about very early on, and you're protecting your client and explaining to them why it's important that we do this early. So get out there and sell something, and I hope this has been helpful to you.